Palantir just reported solid Q1 earnings, revenue up 39%, yet the stock dropped by almost 8% after hours. So what's behind this puzzling market reaction? Is Palantir's sky-high valuation finally catching up with it? Let's dive into the numbers and find out what investors should be watching closely. Palantir Technologies, PLTR, released its Q1 2025 earnings report, showing impressive results. $884 million in revenue, a 39% year-over-year increase, and adjusted earnings per share (EPS) of 13 cents, exactly in line with analysts' expectations. At first glance, these numbers seem strong, but despite this, the stock slid nearly 8% in after-hours trading. Why the drop? Well, while Palantir's domestic performance is strong, there are concerns over its international results, particularly in Europe, which showed a 5% decline in revenue. The company's growth in the U.S. remains robust, especially with $810 million in new contracts. But the weakness abroad is causing some unease. CEO Alex Karp has been optimistic, noting that the company sees long-term growth potential in Europe, but it's clear that Palantir faces challenges in the international market. This raises the question, is Palantir's massive valuation too high, even with strong domestic growth? The company's valuation continues to soar, with a price-to-sales ratio that's among the highest in the S&P 500. This high valuation, paired with concerns over international growth, seems to be making investors more cautious, despite Palantir's optimistic growth story. In fact, this strong valuation may be the root cause of the volatility we're seeing, as investors are hesitant to fully embrace the stock at these levels. Palantir's dominance in the data analytics sector, particularly within government and defense contracts, has helped drive its stock price to lofty heights. But can it sustain this valuation if international markets don't pick up? Analysts have been vocal about the need for the company to expand globally to justify its current stock price. While use performance remains strong, Palantir's reliance on domestic markets and its struggles abroad have led many to question whether the stock price is rational or overinflated. In addition, market conditions are also playing a role. Despite Palantir's impressive revenue growth, the stock market is facing broader uncertainties that can exacerbate reactions to earnings results, especially for high-growth companies like Palantir. The volatility in tech stocks, compounded by concerns over inflation, interest rates, and global trade tensions, creates a perfect storm for investor skepticism. In the world of investing, strong financial results don't always guarantee stock price stability, especially when valuation is out of sync with market expectations. Palantir's earnings report shows that even with impressive growth numbers, the market can react negatively if there's concern about the sustainability of those results or if the valuation appears irrational. For investors, this highlights the importance of not just looking at the numbers, but also considering broader market trends and long-term growth potential, especially in global markets. While Palantir remains a leader in its field, the lesson here is clear. Valuation matters. A high stock price might be difficult to sustain if growth slows or if there's weakness in key regions like Europe. In the end, investors must weigh both the company's financial performance and its market conditions to make informed decisions.